everybody for joining us on this edition of our hugely popular Cummings Pepperdine Crypto Questions. This week you have two interviewers. It's both me and Michael Borelli, our Head of Regulatory Solutions. And we are delighted because we have a treat for you. Today we're talking about crypto with Chris Sullivan, who's the co-founder and portfolio manager for Hyperion Decimus. Now, those of you who are in crypto will know that this is a quant-driven fund with a multi-strat, and it has been going for 5 years, and touch wood, it's been hugely successful. So Chris, thank you very much for joining us today.
You're welcome. Thanks for having me.
And can I ask you just to tell everybody a few words about you and the work that you do in crypto and DeFi?
Sure. You know, we've done tech builds with OMS, EMS systems. We've kind of jumped from the original, less robust wallet infrastructure a la Mt. Gox and HTML pages and REST APIs to a more robust and efficient HFT style marketplace. So we were kind of the guinea pig in a lot of those tech builds. Having that acumen come from TradFi, it was a way that we could apply our skill set for good in crypto to have more volume and more streamlined executions.
Yeah. So you took the experience you've got, and what a lot of people, they come from for someone as old as me, I find it quite amusing to think that hedge funds are now traditional, but you've come from that and then added the crypto. So tell me how did you mentioned your background in hedge in traditional finance. How did you then sort of get into crypto and DeFi? What was the thing that you read about that really sort of captured your mind and thought this could really go somewhere?
It was really the Bitcoin white paper. That's what sort of induced me to invest personally. But as a professional, it was really two parts. One part, the fact that all of my team's quantitative skill set or discipline, our tech acumen in TradFi, at a minimum didn't carry the same alpha weighting as it used to, right?
Yeah.
So it was one part of that, and the other part, seeing the percent of adoption where it was at in 15 to 17, and noting that cycle was able to accomplish such price appreciation with very little adoption and very little total capital.
Yeah.
And kind of backing into an assumption that this can be at a minimum a 10 trillion asset class by the time of the 2024 halving. That was really what got us to sort of pivot over and do it professionally.
So it was 2015, 2017, then it's probably fair to say that you started seeing the numbers and saw the potential of what you'd read in your own personal Bitcoin investment and thought, this could be something we could get other people into, and we can expand crypto and get it to the wider world, so it becomes a more democratized investment, I suppose.
Exactly. And typically, it's funny you mentioned democratized. That's how we look at our fund as a whole, because our team and other teams like us are typically prop firms. And so we created it as an LP so that investors essentially could invest their money next to ours, because we're our largest client in the fund, and our capital is right next to our investors.
Do you see what's your sort of ethos in general on crypto and DeFi? And I say this because I know that you've written a lot. I know that your colleague Dave Birch has written a lot about sort of building on this theme of democratization. Is it a force for democratization, or will we end up with a large amount of wealth in the hands of a few oligarchs?
I hope not, but unfortunately, very little of that outcome is up to my team. I think because we sort of departed from very, very cushy, very high-paying roles in TradFi, our purpose was to be very transparent, just like blockchain is, be very client-centric, and then also democratize access. Mostly, the very best hedge funds in the world, either you don't even know they exist or have very high minimums like 15, 25 million. Ours is just your standard accredited minimum, because our goal is to represent anybody who wants us to represent them, and not have any, forced answering to one large group or not. Really, it's our only way of expressing the thesis of decentralization and democratization in a way that we can.
Do you think on the topic of TradFi, do you think that the gravitation from TradFi participants into the DeFi space will fragment liquidity? Do you still, and on that point, do you still think that hedge funds can achieve sizable returns at this critical juncture in their crypto asset history or journey?
I do think it's difficult to initiate the TradFi folks into DeFi. A lot of that has to do with the on-ramps, right? Like we've been doing this quite a long time. We know wallet infrastructure quite well. So people have to familiarize themselves with solutions like a MetaMask or Ledger to be able to jump into the decentralized space, whether it's derivatives on exchanges like DYDX or it's automatic market making on like a Uniswap or SushiSwap. So I do think there is a tech barrier to entry that they're not used to just having one account and you can access everything you want. So there's a little bit of a barrier to entry on that. But I think the sheer enormity of the DeFi space should attract folks once they get over that burden to really participate across the board, because there is the incentives. If you're doing your homework and you avoid rug pulls and those with weak smart contracts, you can get a more consistent return than you can typically in TradFi for liquidity providing.
Yeah, we did it. Michael and I did a short podcast, just the two of us, and we talked about sort of DeFi, and it was kind of like what is DeFi. What do you think? Building on from that, what would you say are the real sort of benefits for DeFi, and rather than traditional sort of bank, the non-disintermediated client to bank lending relationships?
Yeah, I think it's really threefold. First, you touched on it, the sort of decentralized access to financial services, whether it would be trade finance or lending. I think that's number one, is that it gives banking services to participants who are either in emerging markets or below the threshold for, let's say, a JP Morgan account. That's number one. Number two is it provides really a workaround from your traditional sort of remittances, which are a large part of the GDP expenditures of Latin American countries and sub-Saharan African countries, where they're paying, a company like Western Union 15-20% fees to send money, and then within DeFi infrastructure, especially on the Lightning Network, you can send it in seconds for almost free.
Yeah,
I think that's another big realm that's being solved for by DeFi. And lastly, the incentive structure. You've got waxing and waning liquidity periods where you get rewarded for providing liquidity, and there is beta risk to that. There's no free lunch, right? But volumes in the billions need to transact, and for participants that have a portion of their assets to go to market making, like our fund does, roughly 20%, based on risk reward, we're going to provide liquidity there and get rewarded for that service. So I think you've got those three core spheres where it's essentially very productive and low cost for the participants, and then for those who participate on the liquidity side, they get rewarded.
Do you think there's any chance of the liquidity pool drying up as we enter well, I've got my own views on this, but I was reading something over the weekend, somebody saying, oh no, we're into another 2-year crypto winter. And
that may be the case, to which the response is we've been in it since for over a year now. The orthodox high of the market is in April 2021. That's the orthodox high. So we have already seen a lot of liquidity pools dry up. We've seen some fail. And not all are created equal. It's funny, you're seeing volume pick back up on the swap platforms like Pancake, Sushi, and Uniswap, because they have different types of risk versus like what we saw happen on the Anchor protocol with the UST and Terra debacle. So I think
and I think I'm right in saying different collateralization levels as well.
Right, and then one of the major factors that we saw kind of unearth itself was you've got very transparent leverage in the movement of such in DeFi on wallets, but what's not transparent is when a CeFi, which is a centralized company like a Celsius or a BlockFi, et cetera, you can't calculate the daisy chain of leverage that they then overlay on top of what's transparent. So, in my eyes, you've seen not only violent price retracements where you've seen the smart contracts and vaults be tested with these auto liquidations, but you've also seen the uncovering of a risk that maybe wasn't that transparent to everyone because you couldn't see the literal borrowing by centralized borrowers going on from the DeFi space.
And do you think that, if we all agree that DeFi is ostensibly risky and you have the support mechanisms to sort of mitigate that risk, do you think the horizontal integration or consolidation of the industry amplifies that risk? So, for example, a custodian offering exchange services and vice versa, and people offering multiple services on top of that to get a bigger slice of the pie?
Yeah, so how is it a greater risk? And if it is, but I suppose it's concentration you're talking about, really, yeah. And how do you de-risk the concentration?
Yeah, I mean, you're speaking to the problem at all, right? Like the reason that I'm such a big fan of Bitcoin and decentralization as a whole is the lack of human input, authority, power, and et cetera. When you get these sort of, boom and bust periods, and this period is more related to the centralized companies that are servicers of DeFi than it is like an Aave or a Uniswap. Their price point in dollars or euros is immaterial to the success of the blockchain and the infrastructure. So you are seeing the chance that you're going to sort of homogenize services and then consolidate. Now that's part of the capitalistic process. It's very difficult to avoid. You've seen it in banking, where in the US, you first had the savings and loan crisis, late 80s. Then you had the tech stock bust, which blew up a lot of brokerage houses. Then you had 08, which then further consolidated all of the lending. Are we on a pathway to that currently in DeFi and crypto? I think we're seeing maybe the first round of it, although none of the M&A transactions that we've seen the news on have actually closed yet. So I would argue that if the space is going to remain as decentralized as it is currently, you're going to have to see some more benevolent participants erect, further solutions that have immediate use cases that will attract traders and users of that infrastructure. I know from our end, we're pretty biased about not participating in centralized solutions for crypto. So, to the extent there's further OGs like us that'll just avoid those as a whole for the purpose of we can't measure that counterparty risk. It'll be somewhat remains to be seen.
And on the issue of centralization, I'm slightly going back to the beginning of your conversation, but you were talking about reading the Bitcoin white paper and it's sort of being your sort of your Quo Vadis moment. In the UK, we have rising inflation, we have rising interest rates. Another horseman of the apocalypse is that we've got the railway workers on strike, the RMT. Barristers came out today. There's a lot of talk from teachers' unions and doctors, which appears to be more than saber rattling. With all of that going on within a centralized government-led system, how would you take that, compare it with the Bitcoin white paper of total decentralization, outside state control and so on, and consider the potential benefits of a decentralized system at this moment when we do have at least three of the horsemen of the apocalypse riding into the state-dominated areas?
The transition obviously isn't going to be pretty, but what I can tell you with full faith is that the tech apparatus to accomplish that is already in place. I think you'll naturally go from this sort of quasi-fascist oligarchy centralized power, which is at a minimum across G20, if not the whole planet, save maybe a few venues, but it looks like those continue to wane. What you end up doing is obviously taking from the centralized and then localizing, right? So it is somewhat up to the constituents, whether it be at a county or state level, to demand and then participate in a decentralized solution. You saw in the States, the Supreme Court reversing Roe v. Wade. That is actually a huge example of decentralization, where they're taking The abortion side, which there was never legislative laws for or against.
It was always case law, wasn't it? Yeah, case law and constitution. Yeah.
And there's nowhere in the Constitution that addresses that, obviously. So by throwing
Yeah,
it back,
I think wasn't that what Clarence Thomas was talking about? But anyway, so that's a different argument, isn't it? Yeah.
but the point being, it goes from federal to state, and then the states and their constituents then vote on whatever restrictions or bans or allowances that they would have. That's a really good real-time example of one piece of decentralization. So I do think that with respect to what's going on in the UK with strikes et al, that there's no decentralized solution to that now, because unfortunately for the teachers and the workers of those unions, they have been preyed upon under the auspices of unionized labor and collective bargaining by the government themselves. And you've almost basically engineered a transfer of wealth in the form of labor that has never kept up with inflation and has no economic incentives at the top to distribute income in a way that's reflective of either demand or the quality of the services. So it's a long-winded way of saying there's no pretty plug-in solution to this at the time. You just have to transition to the best of all of our abilities as humans and understand that, that transition is going to lose us a little bit of time and money, but once it's in play, those arguments should cease to exist.
At the so we went to the all-party parliamentary group on crypto and blockchain last week, and of all the mechanisms suggested to deal with the general information asymmetries in cryptos, education. And what's your view on education specifically to DeFi, and how can we demystify DeFi?
It's not easy. I wish that there were, collegiate level classes that people could take, or it would be part of a, I've got an 8 and 6-year-old, like learning the adding that to a math curriculum or physics curriculum would be amazing. It is terrifying to be your own bank at first, right? Now, I've been doing this a long time, and I feel very comfortable having vast sums of capital on a hard drive, right? But a lot of other people first don't know that they shouldn't trust the banking system, and second, really don't even know how to use, web services well, or apps versus a wallet infrastructure. So I do think that is probably going to be broken wide open out of necessity, which is the mother of all, learning experiences when you have to. But no one's really approached attracting a wide array of people to learn how to use a MetaMask, which
and starting it young. Mind you, I think the youngsters have probably sort of got a slight advantage on there because they've always been used to this kind of thing. It's one of the reasons why I suspect the move into the metaverse is going to have such enormous take up when the children who've been playing with iPhones since they were tiny start to
my 8-year-old knows how to use the wallet infrastructure with the various gaming apps.
Nice.
And then unfortunately for me, now knows how to spend it. So once you grasp just the white labeling of wallets and how to transfer, it actually doesn't become that difficult.
It has a logic to it, doesn't it? Yeah.
It's biblically better than wiring. Now I'm sure in the UK it's similar to the United States. It used to be you call your private banker and you can send a wire. Now it's a form, or now you got to go in, and if it's above 5,000, you got to do this and that, and then they charge you either $75 or $100 each way.
Yeah, so it's painful in time, it's painful in money, it's painful in sort of needing to be physically present. Yeah, all of those things.
And when you're dealing with smaller sums of money, not investors like us, those dollars add up a ton. To us, it might be right, like, son of a gun, I have to deal with this. But it's the same element of time. It just doesn't have that extra, I've got to learn how to run a wallet infrastructure, and I've got to make sure I have a password vault. So I got to make sure I keep my keys. That doesn't sound like that much to burden someone with for a real opening of freedom.
This leads us on to, when we're going back to the theme of democratization, this leads us on to So the unbanked, the developing countries, sort of the progression of microloans into the use of crypto, and how revolutionary that can be. Yeah, the lives that can change. Yeah.
Not only in just saving money, and I've got unique experience in Latin America. My wife is from Colombia. It is for the comfort that infrastructure that Dash, for example, which is very big in Latin America, as well as Bitcoin, it gives these people an air of confidence that they didn't have before. And with the regime change turnover in Latin America being so frequent, they were not as concerned as of how, it vacillates relative to the peso, because it's basically the Colombian peso, Mexican peso. They've mostly only gone down in their entire existence. So what Bitcoin trades at in their currency is immaterial to the asset protection that provides them the ability to transact. It's permeating in Brazil pretty massively, and then we saw, I think it was about a month ago, Argentina was banned. Their biggest bank was banned to doing big services by the IMF. I mean, if that doesn't show people that obviously this is a threat or very, very little augments the power of the central banks, I don't know what is. It's a great example of it. And to me, it's one part force and one part faith.
So what would you say are the main hurdles to a greater adoption of decentralized financing? In particular, I mean, I think DeFi lending is the area which, I think has the most potential for growth, although, of course, with risk as well. What would you say are the main hurdles?
I think tech's one, regulatory clarity two, and then adoption three. To me, the biggest opportunity in the United States in DeFi is not with the investor community, it's with the small business community.
Yeah.
Right. They're the ones that pay 3.5% to credit card processing fees. Well, if you've got a business of 5 employees doing $1 million a year of revenue, that 3.5% is material. And then you throw on the banking fees and check cost. That's another 150 basis points of their revenue. So I think that is a massive opportunity for DeFi to pierce kind of the veil and create value for those small business owners.
I agree with you entirely. Actually, certainly we're seeing quite a bit of that in the work with our clients, and I've never used the word revolutionary before, but really revolutionary developments to increase the ability of SMEs to lend at effective rates and effective costs, and therefore then ongoing wealth creation and job creation.
Well, if you go soup to nuts with it, a small business could even tokenize, right? It could save money by having DeFi payment infrastructure, and then could get lending services from DeFi quasi-banking features. And then you open up the whole world. If let's say I'm a mom and pop hardware tool store in Kansas, right? If I'm decentralized, I can open myself up to people in Florida or people in the UK to products and services offered by the company that otherwise they would have no access point to, right? That mom and pop shop is not going to sell a hammer on Amazon, right? But someone, if they're in the DeFi sphere, someone might be attracted to that and want to give their business to that firm. So it really kind of solves for the entire circle of capital within typical commerce. But you've got to hammer the point home on the use cases, which are very obvious to us, but need to be educated for the small business owners.
Drawing back to what inspired you in the first place, Bitcoin white paper, what do you think the thoughts of the pseudonym Satoshi Nakamoto are at this time with regards to DeFi? Do you think, what do you think they are, or them? He, she, it. What do you think? Yeah, exactly. Their view on
if we assume
the situation.
Use all of the pronouns.
We gave the singular as well as plural. Yeah. We're plurality fluid in this office.
That's a good phrase. I don't know that the group or groups that had a hand in birthing Bitcoin really conceptualized the remainder. I think it was the genesis was providing sort of a better gold and a alternative system based on a permissionless distributed ledger that infrastructure is not only unhackable but cannot be controlled, or at least very difficult to control. Speaking to the 51% attack, it's hard to speculate what they then would have been predicting, but obviously Bitcoin did unleash the concept for decentralized everything, right?
Pandora's box.
So, yeah, I mean, and it's really
well,
just
the door that door that opened up, wasn't it? And it opened up an infrastructure on which to build, create, and then develop further. I think that was it. Yeah.
Right. Let's be frank. Had the present system offered any sort of equality of economic opportunity, had any sort of provable increase of velocity of money, it wouldn't have even caught on. But the fact that a lot of the long-term institutions that just egregiously broken, if let's forget we assume they're nefarious and corrupt, they just don't work anymore. So you can see that in any equation you want. Pick your like. The wealth inequality. Last 50 years, the middle to lower classes had the same amount of assets and net worth, 1% this, right? Who bearing the burden of consumer inflation? Because as a orthodox quant, inflation is the increase in money supply, not the cost of goods going up, right? So the cost of goods going up is a purchasing power going down of currency. So inflation is again the increase of money supply, not the increase of the price of goods. The price of goods increase is a byproduct of inflation. So people bearing the burden of that are mostly the working class. And that's an unfortunate thing to occur. Obviously, it's happening all over the planet.
Yeah.
But hopefully it wakes people up. It's you never learn by choice, it's always by pain, right?
Yeah.
So hopefully going through this process, we can understand we need to decentralize all systems. They'll save us money by running more efficiently, create more opportunity, create more wealth, and generally improve the happiness and well-being of all the participants. That's just natural. It's not something that's that hard conceptually to understand.
And talking one last question, Chris, we could go on for ages, and I hope maybe we can do this again, maybe in 6 months' time, have another chat. But my last quick message: where are you investing at the moment? And I make it very clear that this is in no way any type of investment advice.
Yeah, I can speak to personally because the fund is mostly quant driven, so about 60% of the fund is algorithmically traded with all different types of strategies. But personally, I'm taking advantage of having the dollar up about 20% year to date, and then Bitcoin down about 70 off of its high, and converting and arbitraging the benefit of converting more fiat to Bitcoin. That's been a pretty active effort over the last few weeks as it appears that we're trying to find a bottom, or we're close to a bottom. The other side is definitely on the DeFi space. I think the DeFi platforms like Uniswap, Sushi, Pancake, Wi-Fi, these platforms, the performance of the smart contracts are just unbelievable. So I'm continually impressed, and I would rather own the token of the infrastructure itself than
the product that's on it. Yeah.
Correct.
Yeah.
So to me, I think that is a very attractive long-term risk reward, and that's where I place some additional capital.
Yeah, that actually ties in with sort of our own thinking here. In the DeFi lending, it's the structure, the platform that we're working with various people on, and we're very keen to sort of, where we think it's somebody credible, take part of our fees not in cash but in the actual infrastructure. So yeah, that very much ties in with you. And I think we were also talking earlier about, could Bitcoin go lower, or does it need to go any lower to buy? I mean, yeah. But I'd say that now, personally, I say now is a good time to buy hold for the fork at the very least.
You all know me. I'm never going to divest any of my Bitcoin personally. So I have no catalyst that would ever have me converted back to fiat.
Yeah. Chris, it has been an absolute pleasure and a hugely interesting and wide-ranging conversation. Perhaps you could just give everybody quickly your website. So if anybody wants to find you, Chris Sullivan.
Sure, it's www.hyperiondecimus.com, HYPERIONDECIMUS.com. There is a kind of email prompt that you can send that will message us directly.
Perfect. And we'll make sure that goes out as well. It'll be somehow on the link that we send the podcast to people to. Chris, thank you very much. As I say, I hope that maybe later in the year we can get together again and we can see how things have moved in that 6 months and look again to the future.
Sounds good. Thank you all for having me.
Our pleasure. Thank you, Chris. Thank you. Bye-bye.